Good morning. Good morning, everybody. This is Raul Torres. I am your host for the Let's Talk show right here on the internet, on our Facebook page. Welcome to our program this Tuesday morning. It's a beautiful day in Corpus Christi, and I hope it's a beautiful day where you are located at. If you are new to the show, this is the fastest 30 minutes on the internet on Tuesday about a show strictly about business and taxes. You'll learn more here in 30 minutes than you'll learn in a whole year of accounting and tax education in any university. Welcome to our show, and let's enjoy the Bachman Turner hit song. We'll get started in 10 seconds, ladies and gentlemen. So got pen and paper or pencil ready to rock? We're going to get started. All right, let's go. We'll count it down.
The show starts in.
There you go. It's helping us count down. Welcome to our show. Welcome to our show. Everybody watching on Facebook, call your business owner friends and tell them to watch. It's going to be a great topic today. LLC or S-Corp? Everybody wants to talk about LLC and S-Corp. All right. Well, welcome again. I'm Raul Torres. I'm a CPA with over 32 years of experience. Welcome to our Facebook page. Today's topic is something that most people talk about. Maybe you're one of them. Most people are doing this. Maybe you're one of them. But let's pretend you're not. And you've only heard all this stuff that we're going to talk about today. You've only heard the topic of LLC or S-Corp. And it's important that you understand the difference. It's important that you understand the difference because it means money in your pocket if you do. And if you don't, you're going to give Uncle Sam so much more of your hard-earned money. But then again, you make Uncle Sam very, very happy. So either you can make him happy, or you can make yourself happy, or your family happy, or you can take that long, much awaited vacation simply by the tax savings and the knowledge that you're going to obtain from this show. So again, welcome to Let's Talk. Let's get started. Today's central question is a misconception. Many people ask LLC or S-Corps. They're not competing choices, ladies and gentlemen. It's not either or. They're not. Rather, there's two decisions to make. There's two decisions to make. Not one, LLC or S-Corp. That's the wrong question. But there's two decisions to make. So if you're in business, let's say you operate a small business, whether you do it from home or not is irrelevant. Whether you have a brick and mortar building or office, it doesn't matter. You're in business. Or let's say you own real estate. You have one or more properties, residential properties, commercial properties, doesn't matter. Let's just say you do. This topic's for you. I guarantee you're going to learn something today that you do not know. And again, it could mean tens of thousands of dollars in your pocket. That is huge. So let's get started. The two questions that we really should be asking ourselves, if you're contemplating getting real estate, maybe you're brand new and you want to add additional income for retirement, or you want to just add additional income, and you're thinking about buying your first property, and you've heard your friends and what they do, blah, 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 or you're thinking about starting your own business, which, by the way, I highly recommend anyone who makes money for a living through some type of activity, either W-2 wages or 1099 contractor pay, or you just own a small business. Either one, right? This topic's for you. It really is. We do hundreds of tax returns, and at least half of the people that come in and allow us to serve them give Uncle Sam more money simply because of this topic today, LLC or S-Corp, which isn't really the right question. The real questions are these. Which legal structure should I have for my business or real estate? That's one question. The other question is, How do I want to report that business activity or rental activity to the IRS? Two different questions. How do I want to file my taxes? And what type of legal structure should I have? Two questions. Not one, LLC or S-Corp, but two questions. What legal structure should I have? How do I want to file for my taxes with the federal government? All right. Now, an eligible Texas LLC remains an LLC under Texas law if they elect the entity as an LLC, but they elect S corporation treatment for federal tax purposes. Remember, we said there was two questions. How do I want to structure for legal purposes, and how do I want to file my taxes? So an LLC over here is for legal purposes. Over here is how do I file my taxes? You can elect as an S-Corp, or you can elect sole proprietorship. Or if there's two of you in this business activity or rental activity, you can elect partnership. Those are the three most popular ways. I seldom have ever run across any client, maybe one, maybe two max in the over 30 plus years that will elect C-Corp. But there's reasons for that, and this show's not about that today. All right, so that's the key issue. What legal structure should I pick for what activity, and how do I want to report that to the IRS? Listen, if you have a question, just post it right there on our Facebook feed, and we will get you an answer sometime today. And if anybody wants a copy of today's script, be happy to send it to you. Again, give us your email address, and we'll send it over to you. Look, this program is all about you and all about your money, and we want to help you understand how to navigate through this process called taxation, navigate through this process of electing a proper entity for the type of business you want to operate, or real estate, and how you want to operate your real estate holdings. All right. All right. All right, let's go to section 2, or the second issue. What is an LLC? Look, I am not an attorney. I'll tell you that right now. And this show, it does not in any way, shape, or form give legal advice or give specific tax advice. Let me make this suggestion, or let me read this statement, which is very, very important. This program provides general educational information and not individual legal, tax, investment, or accounting advice. You're not our client. We cannot give you specific information about your situation via this podcast. Your choice of entity election depends on many variables. Your owner status, state law, contracts, licensing, requirements, payroll, basis, financing, long-term exit plans, and even current financial plans. Listeners like yourself, you guys that are out there listening, should consult with qualified, now I use the word qualified, legal and tax advisors before forming or deciding what entity you're going to pick, or making an election of how you want to report your business or rental activity to the IRS. I highly recommend you do that. Very important. It's best to spend money on the front end, then later on down the road, you got to clean up the mess that was made because you didn't do it the right way for your situation. Okay. Okay, so that being said, let me go to my next note. All right. So what is an LLC? Well, according to my understanding, an LLC is formed under state law. So we got 50 states. We have 50 different sets of laws for LLCs. All right. The owners of an LLC are called members. And in Texas, an LLC may be member managed, manager managed, or a combination, permitting by its governing documents, which is called an operating agreement. Limited liability is not absolute. Personal wrongdoing, personal guarantees, payroll tax exposures, commingling of funds, and just not managing your administrative duties, or what they call entity practices, can create lots of personal risk. So when your friend or your buddy tells you, hey man, let's do an LLC, you get protection against all your personal stuff. Not necessarily true. Not necessarily true. All right. So, federal tax. So when you create your LLC, the next step most people do is they register with the IRS. One owner. If you register with the IRS with one owner, the IRS automatically considers you a disregarded entity, right? And will have you report as a sole proprietor. They call that Schedule C on the Form 1040. So you're going to report your business activity, if you're a business, to the IRS as a sole proprietor. All right. If there's two or more of you, the IRS is going, members that own the LLC, the IRS is going to set you up to file as a partnership, Form 1065. And if you elect, make an election, which is another document that you have to file with the IRS, and tell the IRS, hey, listen, I am one owner or I am two owners. We don't want to file like that. We want to file like this, which is either an S-Corp or a C corporation. 1120S form or Form 1120. Then the IRS will approve you if you do it within the first 75 days of registration. And that's how you'll report your activity to the IRS when it's time to file your taxes. All right. So what are the advantages? Advantages of LLC. There's several advantages. And I'll use one word, flexibility. That's the key word. There's lots of advantages, but I'll just leave you with that one thought. You have lots of flexibility when you are structured as an LLC. But then again, there's disadvantages, right? Disadvantages being an LLC. All right, number one, which this is what most people are interested in. You're automatically subject to payroll taxes. Whether you're one owner or two or more owners that own the LLC, and you don't make any elections, you're automatically subject to self-employment taxes. So for example, you're a sole proprietor. Your LLC makes $50,000 after expenses, right? Never mind that you're going to pay income tax on the $50,000. So let's say you're 22% tax bracket, $50,000. 1, 2, 3 times 22%. Your federal taxes is $11,000 on that $50,000. That's federal tax. But because you're treated as a sole proprietor, the IRS says, hey, listen, it's time to pay up on your Social Security. You know, that program that promises you a good retirement. So now we're going to take an extra 15.3%. And you're going to give Uncle Sam another, for the privilege of being a sole proprietor, another $7,650 for a grand total of $17,650 of your $50. That leaves you approximately $32,000 left. That's it. You get that privilege. That's the downside. Whether you're a partnership or you're sole prop, that's the downside. There's other downsides. You're subject to Texas franchise tax, right? And other things. I mean, like just the mere fact if you're dealing with a partner or another member complicates things. All right. Okay, that's an LLC. Any questions? All right, we're going to hurry on. Let's talk about an S-Corp. An S-Corp. What does that mean? Okay, we talked about selecting the entity. Now it's time to select how am I going to file my activity to the IRS. You know, Uncle Sam sticks his nose in almost everything we do in life. And so filing is one way they do it. So what S-Corp does, what does it mean to file as an S-Corp? If you make a timely election, the IRS treats that business as an extension of yourself, right? Which means the business has to file a tax return, which raises the cost of running your business, right? Assuming that you don't do it yourself. And the IRS looks at that business, and whatever happens in that business, the corporation itself, the LLC that's taxed as a corporation, doesn't pay any income tax. Zero, nada. Because it's treated as a flow-through structure, entity. And whatever happens there shows up on the individual's tax return, whether it's an income or as a loss, assuming that we're eligible to take the loss write-off on our personal taxes. There's other issues involved. So that's what S-Corp means. You want to file a separate return for federal tax treatment, and the S-Corp kicks out a K-1 to the owner or to the shareholder, the member, and then that K-1 gets put on the personal tax return, subject to income tax and subject to tax deductions, right? All right, based on limits. There's limits. All right, you have to be eligible to be an S-Corp. Not everybody qualifies, but most people do, but not everybody. There's a limit how many shareholders can be. There's a limit to how many classes of stock there can be, and you need to get approval by the IRS. It's not an automatic thing depending on when you request it. All right. There are advantages for S-Corps, predominantly for tax purposes. Number one, you can reasonably balance the requirement the IRS has for S-Corps, pay yourself a reasonable salary, subject that to payroll, and the rest of the income, the profits, you can take out not subject to payroll tax, which is kind of cool. This is where a lot of owners may reduce their federal tax burden. And because it's a pass-through treatment, you don't pay double tax like the C corporation does. So taking a $50,000 net income, an S-Corp, net income S-Corp, K-1, only that owner shows up on their personal tax return, $50,000, they're going to pay tax only on that $50,000. Single tax. A C Corp pays the tax on the $50,000, which is 21%. So $50,000 times 21%. The corporation now will pay the IRS $10,500 of the 50, just for the privilege of being a corporation, a C Corp. Then, when the owner wants to take out the remaining amount of money, which is roughly $39,500, the owner is going to pay their tax bracket, assuming they're in a 22% tax bracket, $39,500 times 22%. The owner is going to pay another $8,690, say $8,700, just for the privilege of taking it out of the C Corp. And so we call that double taxation. Listen, ladies and gentlemen, there's a lot of potential benefits to selecting S-Corp, but there's also disadvantages, because I have bad news for all of us. There is no perfect, absolute, this is the one best way for everybody, right? It doesn't work that way. Everyone must go through their own process of determining what's the best fit for them and their particular situation at that particular time. That's why we invite you and recommend that you go talk to a qualified attorney, tax attorney, or a qualified tax professional who's been doing this for a while and they understand the challenges that small business owners and real estate investors may have. Okay, I want to take a quick break. I want to tell you about us. Raul Torres CPA PC. We're located here in Corpus Christi, Texas. Beautiful city by the sea. They used to call us the sparkling city by the sea years ago. We just moved into a brand new office building. God has been so good to us. We give him all the glory and all the thanks for his many blessings. And so we're right here at 3046 Holly Road. We invite you, if you'd like to come by and visit, you want a free consult, give us a call. We provide free consultations on income tax, on accounting, reporting, on payroll, and we also handle tax IRS issues. If you're behind on owing the IRS or you haven't paid them and you want to see what's the best route to resolve this issue, we call that tax resolution. Or maybe you just want to form a new LLC, or you want to form a corporation. We also provide business formation services. It's this complete package, turnkey system, flat price. We like to make it easy. and we give you your facts so you can make good choices. That's who we are. Raul Torres, CPA, PC. Been doing this for over 32 years. We love what we do. We got an amazing group of professionals in this office. And we invite you that if you're looking for that professional who puts you first, give us a call, come by and visit, check us out. Go to our website, raultorrescpa.com, and check us out. It's all there for the public to know who we are. We are different. We're not like other CPA firms. We're different. And we invite you to come and get to know us if you like. So if you're struggling getting financials done promptly, if you're struggling getting a tax return done when you want it done, if you're struggling paying the IRS way too much more of your money in taxes, and you're sick and tired and fed up, then you really owe yourself a favor and give us a call. 361-854-0822. Might be the best phone call you make all year, because we're really good at using the tax code to help clients actually and legally reduce their federal taxes. We are. I ain't bragging. In fact, I feel pretty confident that we can guarantee that if you're making over $40,000 to $50,000 a year in your business, I guarantee that 99.9% of you are giving Uncle Sam more money than you need to legally. But they don't mind. So if you don't mind, they don't mind, then don't call us. Just keep doing what you're doing. But if you want to keep more money and you just don't know how, ladies and gentlemen, give us a call. It's that simple. All right, back to the topic. And there's disadvantages for S-Corps. I want you to understand that. There is no perfect system. Listen, when it's time to operate a business, and we'll get to real estate in just a minute, an S election may be your most attractive option, especially if your business generates, generally speaking, 1 year to the next, over $40,000 per year in net income. That means after expenses, right? That's what it means. And so if you're not doing that, I guarantee you're giving Uncle Sam way too much of your money. And normally I see this in the medical profession, chiropractic profession. I see it in the dental profession. I see it in gig workers, contract labor, contractors. I see it in service-based business owners. I see it in retail shops. I see it everywhere. I see it everywhere. It's huge. All right. Reasonable compensation. All right. So when you operate your business, everybody needs to make money to pay their bills, right? For their home, right? But that being said, the IRS requires people who operate and file as an S-Corp, whether you're an LLC or corporation, doesn't matter, for you to pay yourself a reasonable salary. IRS makes it very clear. It doesn't tell you what that number is. It's just reasonable. And that depends. Depends on lots of places, like where you're located, right? Depends on what your net income is of your business activity. It depends on how much time you contribute to the business. It depends on your status. Are you semi-retired, fully retired? What's going on, right? And so what we do, we analyze all those variables, and then we recommend a reasonable salary for that taxpayer and maybe their spouse or their partner for that particular moment of time in the year, with a projection of looking forward. And we plan forward, and then we make adjustments as we move through time. All right? All right. So when you look at the entire picture of an S-Corp and a sole proprietorship or a partnership in an S-Corp, that payroll tax is a big, big factor. All right. So we look at everything together, and we even look at the QBI deduction. We look at the other variables that many business owners should be doing that they don't, like retirement plan contributions, health insurance, additional payroll costs, and of course the compliance costs of maintaining your business. And right, and we look at not only the present moment, we look at the rest of the year, and we start beginning to look into the new year as we go through the mid-year, September, October period of months to get ready for the new year. All right. So that's the big advantages and disadvantages of an LLC or a corporation that files as an S-Corp or a C-Corp. An LLC that files as a sole proprietorship or an LLC that files as a partnership, well, while you may have a simpler way of managing the business, slightly simpler, not much, but you might, you're still also automatically giving Uncle Sam a lot more of your hard-earned money. Lastly, let's wrap up the last few minutes about real estate. Long-term real estate property. Uh, Rental real estate from long-term rentals is generally not subject to self-employment tax, right? It's not. So you don't need to file that under Schedule C. You file that under Schedule E. And and therefore, being an S Corp doesn't do you any good. So we don't recommend an S Corp for people that are filing strictly real estate activity. Heck, we just don't. Now, if you're going to do something different besides the real estate, then maybe, and I say maybe, that might make sense. Agent, brokers, and property managers, you guys, I've talked to I don't know how many presentations for real estate agents, and you guys are just overpaid. Oh my, those of you that are successful in the real estate business, right? Commission, management fees, rental property managers fees, all that is business income. A profitable LLC could benefit with an S election with proper reasonable compensation. So you could. And if you're not filing as an S Corp and you're making money in real estate from collecting commissions or management fees, then chances are you're overpaying Uncle Sam. Pretty much I can guarantee that. So you should take a step back and reconsider what it is you're trying to accomplish, why you're still doing what you're doing, and see if that perhaps you ought to reconsider everything, all right? Lastly, we have these people we call flippers and developers. Properties only held for like inventory, we fix it up, and then we sell it, all right, for a gain, all right? An S election may be a good choice if you're going to be doing other operating activities, all right? It just depends. Again, there's so many barriers. I just want to throw it on the table out there that you should consult with a qualified tax advisor who can take all these variables with you, from you, and then do the analysis and make the recommendation. Now, if you're short-term rentals and you're in real estate, you got to take a look at your average stay, additional services, your turnover, cleaning during the stay, the meals, the concierge services, the employee involvement, and how much you participate. Do not rely strictly on short-term rentals that you automatically should be going into an S-Corp. Again, there's variables to factor in. So for those of you that are in real estate, you really need guidance on selecting the right entity for the right reason, and then file your taxes that maximize how much money you keep and how much you can reduce your federal taxes. All right, listen, this has really been really fast. I haven't covered everything that we could talk about that, but I'll say this. When you're ready to make that decision, you need to look at the whole pictures. Things like, what am I doing to produce income? Is this income subject to self-employment tax? Do I need to provide a reasonable salary? How much profit do I average on an annual basis? What is my expected tax savings if I choose to become a C Corp or an S Corp? What are my future, do I anticipate having future shareholders or other people participating in the business activity? These are all some of the many questions that come into play when you're at that moment of time, either growing your real estate portfolio or growing your business or trying to generate more profit. This is really important. So let's summarize this as we come down. I'm going to take 1 minute longer than I should have. LLCs is a legal structure. Corporation is a legal structure. Partnership is a legal structure. And when we talk about LLC versus S-Corp, that's really not the right way to say it. It's really two questions. What entity structure should I pick for the activity that I'm doing? The next question is, how should I report that to the IRS? So you really need to look at that to consider which is the best choice. So whether you're self-employed, you're a gig worker, you're contract labor, or you're a business owner, those decisions come into play for you to maximize your tax savings and keeping more of your hard-earned money and minimizing potentially your legal exposure to the potential windfall, I mean, not windfalls, events that may occur in the future. Lastly, let me see. For those of you that are real estate, you really need to think carefully about why you're going to be an LLC, because there's a lot of responsibilities that go with that. And you think you're getting this liability protection, but if you don't understand your duties and responsibilities and you don't execute them, you're going to be very surprised when somebody drags you into court and you think, oh, I'm an LLC, I'm cool, nobody's going to touch my personal stuff. You're going to be surprised. So visit with a competent attorney, visit with a competent tax advisor, and really make a better choice by being more informed of what your options are and why. Ladies and gentlemen, that's the fastest 30 minutes on the internet. Thank you for watching. I'm Raul Torres, CPA, and we're right here at 3046 Holly Road, and we welcome you to come by. Bring us your questions. We offer 15-minute consults to anybody who wants one. They are limited slots, so it's first come, first serve. Thank you for watching. Tell your friends about it, and God willing, we'll see you next week, same time, Tuesday, 10:30 a.m. Have a great week, and God bless you.